Okay, good morning. Thanks for being here. Hope everyone had a great weekend. Today, we're going to be talking about something I think is really critical in our market right now. Specifically, this year, it is a very competitive market, but turning out to be, again, one of the most hot markets we've ever seen. We're on track to break a number of other records this year, and that is all great, and I'm thrilled about that. However, I think it's really critical, and I keep hitting the same point in these conversations we have weekly, is it's in this market that it's critical that we learn the skills to really dominate when the market does shift. And we're seeing some shifts, just different types of shifts in our market right now. So one of the things that, one of those statistics that I'm most proud of right now is our agents are nearly on track to be making 50% more money than they made a year ago, which is awesome. I'm thrilled to hear that. So their gross commission income is about 44% ahead of where they were a year ago. However, that being said, my fear is that while their gross commission income they're outperforming their gross commission income significantly, I'm worried that their net income is not increasing at the same rate as their gross income, meaning that while they're plugging into the model, they're plugging into the activities that are driving a higher gross income, they may not be really leaning into the habits from the budget model that will increase their net income significantly as well. I always find it really interesting, particularly looking at top-down reports, seeing what agents are producing, and we do track that in gross adjusted volume. But it's really interesting to me to see that oftentimes the agents you see at the top of the list, the ones making the most money on a gross standpoint, I would dare to venture and bet that they're not making the most money from a net income standpoint. And those of you that have plugged into several of my trainings, you know that one of my goals is to help our agents shift their mindset from gross income to net income, and then eventually have you thinking in the aspect of what is my net worth and how do I affect my net worth. And obviously those agents getting into the business, they're always focused on that gross commission income number. However, if we know that the average gross commission income for agents across the United States is less than $40,000 on a gross standpoint, that means their net income is nearly probably half of that, meaning they're netting only $20,000 a year. So if we get really good at the skill set and the habits that protect that income, meaning that all those gross revenues that come in, if we hold those dollars accountable and have a demand on the return of the money we do have to spend to grow our business, and this isn't a conversation that we should have a fear around spending money. We should just be very strategic in how we're spending money, how we're investing that money, how we're holding it accountable, because the better we are at those skills, the better it's going to affect our net income and ultimately our net worth. So let me share my screen here for a second, and let's walk through a couple slides. So here's a couple things that I think is interesting. This is a little flow chart to help you understand how most agents view and take in their money. And this is called the troubled flow of money. So here you can see this big check. This is the commission check to Mary Realtor. Mary's worked her tail off here to get this client to the finish line. She just got a commission check of $10,000. Well, this is how most agents treat their money as it comes in. Is that money comes in, it immediately goes to their personal bank account. And from their personal bank account, Mary's probably already identified the things that she wants to buy with that money and spend it. So she's goes directly to her wallet, and zero of it goes set aside for state and federal tax. Zero of it goes set aside for self-employment tax. Zero of it gets identified for business savings in case of a market shift. None of it gets allocated to charity. Realistically, generally speaking, I fear that most agents, as the dollar comes in, if for every $1 that's come in, they've already identified $2 worth of things they want to spend that money on. And that's why it really blows me away and surprises me how many top producing agents tend to be the ones that are always in a bind or in a pinch for cash flow, waiting for that next deal. So the better we get at the specific skills we're going to talk about today, before we're a mega agent even, it becomes easier for us to establish those habits and really drive long-term net worth. So let's look at what the smart flow of money is here. So same thing, Mary Realtor worked her butt off and got this $10,000 commission check. So Mary, though, had set up some standard procedures to help protect her money, where she has a specific business account. Now, keep in mind, I always, just like you guys when you're sitting in a listing presentation or buyer consultation, I will give the precursor here that I am not an attorney, I'm not an accountant, and I'm not giving any legal or tax advice. However, I know that it's very important for me to protect every dollar I earn, because I work very hard for my money, and I want to make sure that I keep as much of it as I possibly can. I want to make sure that I'm paying my fair share to Uncle Sam. However, I don't want to pay any more than I need to pay in taxes, so I want to protect that as much as I can. And one of the ways of doing that is making sure that all of my money flows into a business account, and I track my business expenses meticulously, so I can clearly write off any business expense that I can reduce the amount of income that I'm showing. So here you can see the smart flow of money as Mary gets this $10,000 checks. It immediately goes into her business account, where she can clearly track all of her business revenue. And then she starts saying, okay, well, how am I splitting this up from here? I know that a portion of this has to go to business expenses. I know a portion of it has to be set aside for tax. So from the business account, you can set up strategic rules. And perhaps the best way to do this is depending on how tempted you are to touch that money. Perhaps you set up a couple business accounts and immediately put in, take 30% of it or 35% of it and put it away into a separate account, knowing that that's for tax purposes. Because nothing's more frustrating than getting a call from an agent in April saying, I got to come up with $40,000 for taxes, and I haven't been setting that aside. So make sure it goes to your business account, track your business expenses meticulously. I also recommend as you create money rules for your business, I also highly recommend you create money rules for you personally. So you can see the money that goes into Mary's wallet here to the very right bottom corner. I would almost expand this diagram to say, for every dollar that goes to Mary's wallet, how is that money being allocated? So for example, for every $10 that goes into your personal account, perhaps $1 of that goes to a charity of your choice. Perhaps $3 of that, or 30% of that, or even 50% of that perhaps is what you need to live on. Maybe 20% of that goes towards future investments. But get clear on what your rules are, because if you don't establish the rules of where that money goes, you'll be asking the question of, I don't know where my money goes. It seems to go out as fast as it's coming in. In fact, I had this conversation with an agent last week, very successful agent, that made this exact same comment as, I'm having my biggest income year ever. However, I've got to figure this out because I seem to be spent. I don't feel like I am, but it seems to be that I'm spending more money than I've ever spent, but it's not even recognizable how that money's being spent. So I really recommend just creating money rules. For every commission dollar you get that goes into your business account, how is that split up? Where does that money go? Secondly, the portion that does go through to you personally, what are your personal money rules? Where does that money go? And obviously all of us are at different stages of life and careers. So there isn't one set of rules that matches us all. It really depends on if you're in wealth accumulation mode or wealth preservation mode, how much of that income that you need to live on. So for example, when I was starting this process as a 21-year-old kid, I needed a good chunk of my income to live on. However, I was willing to make some sacrifices in the quality of life that we were having. meaning that we weren't eating out as much or whatever that was, to at least take a small portion of it and set it aside for investing. Where I'm in a position now where it takes a much smaller percentage of my income to live comfortably on, which gives me a bigger percentage of my money now that I get to follow those money rules and really accumulate and preserve wealth. So create those wealth rules for yourself and just get clarity and live by those rules. And this is the smart flow of money. I highly recommend if this is something that you're not naturally good at, have a conversation with your tax accountant and your attorney to make sure that you have this all set up in a way that's going to best protect that dollar that comes in. We don't need to go any deeper into this except to set up proper business accounts. One thing I will mention is one of the simplest ways to do this, as far as tracking your expenses, is to have a separate business credit card that's associated with your business. That way it's not a matter of you getting out your, none of us need one more task of things to do every month where we need to get out our credit card statement and go through and highlight what was a personal expense versus a business expense. I just keep it really simple. For each one of my businesses, I have a separate business credit card where at the end of the month, my virtual assistant can easily identify what money was spent for which business, instead of trying to go through and pick it apart. So a couple of business principles that I think are really important for us to get better at. And it's oftentimes we're looking for a much more complex solution than we need. And the MREA, the Millionaire Real Estate Agent, really identifies a couple key pieces of this that will help us live by our budget and really affect our net income, because this business is not about how much you gross, it's about how much you net, because the money that you net is the money you get to spend in any way you want. And that is, and if we preach that having a business worth owning is about creating a life worth living, and living a life by design, it really is about that net. The net is the biggest effect of living that life by design. So 3 key areas of your budgeting process is: number 1, lead with revenue. I think this is really critical right now, particularly because one of the biggest shifts we're seeing in our market right now is as agents are making more money this year than they've ever made before, there's a lot of people out there that want to prey on that income, meaning they don't want to do the activities to make that money by calling and really selling their services to be a great agent. So I'm seeing more and more people setting up opportunities or items or services or products that they can sell to real estate agents, because real estate agents tend to be easy prey in the fact of, let me show up at a sales meeting and sell some new lead source or some new tool. And I see agents lining up for it when they're not already plugging into the simplest of tools that are already available to them. And they're choosing to spend money to chase these new products or new services before they even earn the money, before they even understand if they need that product or service. So really lead with revenue and ask yourself the question: am I spending money out of my savings or my pocket to try to generate business? And if you are, then you need to really go back and study the MREA model, because the model says that we should have plenty of business within our arm's reach that we don't have to pay for. If we're not tapping into that, we should not be spending money on additional lead sources or products or services to generate more business if we just really haven't capitalized on all of that business within our arm's reach, within our SOI and social media. So number 1, lead with revenue. If there's this shiny new product out there that you're dying for, make a game plan around how to generate the revenue to go get it. Number 2 is play red light, green light. This is the simplest of games, but it is critical to play every month. And as you get better at this game, the better you are at protecting your money. It's so funny how hard we'll work at going out for what, and how hard we'll go out and spend extra time away from our family to go generate one more sale. However, we won't spend the time analyzing our budget and reviewing our expenses to really protect or save the same amount of money from going out. We'll go out and generate new money, but we won't protect the money that we already have in our pocket. Both skills are critical in this business. So playing red light, green light is at the end of every month, going through your profit and loss statement in detail and really asking the question. So for example, one of the lead campaigns that we run on my team is called HBC, or we call it our home profit calculator lead source. And this is our most expensive lead source. And every single month we break it down and play red light, green light. We ask the question, how many leads did we generate through this process? What was our speed to lead? How quickly did we respond to every single one? How many were converted to appointments? And we break this down by every team member. So how many of these leads went to every member of our team? How did that team member do at speed to lead? How many times did that person follow up before they either drop them into our long-term drip campaign or set an appointment? So we're really playing red light, green light and saying, how do we hold this better accountable so that even if we are getting a return and we get a significant return on that lead source, but we're constantly asking, how do we get a better return on that lead source? So then we ask the question after we've analyzed it, is it red light? Do we shut this down? Or is it green light? Do we proceed and make it even better? And that needs to go with every single expense that you have. So play red light, green light. As you get better at this is a very fast process, particularly if you're good at tracking your expenses. Number 3 is stick to the budget. Number 1 is I think a lot of us feel like we need to wash our mouths out with soap when we say the word budget because most of us hate to do it. However, the better we get at budgeting, that's only half the skill. So being good at budgeting is half of it. Living and sticking to the budget is the other half of it. It does you no good to establish a budget if you can't live by the budget. So luckily, a lot of us look at that and say, we don't even know where to start with our budget with the MRA model. But we have a really good model in the MRA that shows us what our percentages should be. Now, one of the things that I always outline when I'm talking to agents about this directly out of the MREA is you shouldn't look at this and say, this is exactly what my expenses must be. If you go back here, and this breaks it down in a big piece, it shows me based on how much gross commission income I'm looking to make this year. Say that my goal was $300,000 in gross commission income. It shows me how much money approximately I should be spending for cost of sales, what my gross profit should be, what my expenses should be, and what my net income should be. So they're saying off of a $300,000 gross commission income, my net income should be $186,000. Now, this breaks it down a little bit farther to say, okay, specifically with your expenses, what should my expenses, what is the breakdown of those expenses? Salary, lead generation, occupancy, rent, technology. So it shows me percentage-wise what I should be at. Now notice off the left here, I also drew in approximately what it should be for about 140,000 gross commission income, but it seems like a lot of newer agents are looking to net that $100,000. So I drew that in as well here. However, the point I'm making here is this is a phenomenal tool to be looking at, to be saying, where should I be coming in? And just like with anything else, we should be asking the question, does that make sense for me? So for example, with $300,000, you may look at this and say, well, I'm on track to make $300,000 this year, but I don't carry any salaries. Like I don't need that $36,000. So the question I would ask there is, number 1 is, are you missing leverage you should have? Because other agents in the average agents that are in this world are spending $36,000 a year in salaries. Should you be leveraged somewhere else? And if you were leveraged, would you spend that $36,000 to get you into this $500K? Would that push you into the next level? Or you could look at it and say, no, I figured out a way to do this with a virtual assistant for $15,000 a year. So I'm going to reduce this to $15,000. That's okay if you can answer the question, why am I different than the model? And then you need to identify specifically for you, are you the type that is scared to spend money, so you're not investing money in your business? Or are you the type that is just too quick to spend the money and you're throwing money all over the place and not holding it accountable? I find that agents tend to fall in one of those two categories, and recognizing which category you fall in will better help you ask the right questions of why am I setting this as my budget? And is it appropriate, not for what my goals are today, but for where I'm going with my goals? So a couple things to consider real quick with this are some simple questions. So number one, we get better asking these questions. How much money did I make this year or month? The answer to this is we need to track expenses accurately. Again, I'm not the best at saving receipts and keeping a little shoebox and all those things. For me, I'll take pictures of receipts. I really lean on now, even though I did this myself for a long time, I lean on my virtual assistant to really organize a lot of this data for me, to really for me to eliminate or reduce the amount of time I spend on this every month. But you have to track your expenses accurately. And the MRA model gives you all of the categories you should be tracking. Don't go and create a bunch of new categories. Just follow the model to know exactly which of the general ledger accounts you should be following. How am I doing based on my budget? Play red light, green light every single month. Did I make any money on that last transaction? So this is where you start getting a little bit more detailed. So for every transaction we close every month, we identify the lead source, and we can specifically say how much money did it cost us for that sale versus the other one. And we know that some of our sales cost more money based on the lead source, and our splits with our agents, depending on what their split is. My cost per transaction is different, so I constantly have to be analyzing that to say how much did I spend to make that money? Was the money I spent on the last campaign effective? What kind of transactions make me the most money? If one type of transaction makes me more money, I need to figure out a way to do more of those transactions with less effort. Where do I spend my time? So this one I really think is critical for most of us, because we forget that we're still, even though we don't get paid hourly, we still have $1 per hour worth for every activity we do. I find agents, some of the most talented agents I know, spend a significant amount of time doing $10 an hour activities. And that just cracks me up, because they could be they avoid doing the $1,000 an hour activities to do a $10 an hour activity. So ask yourself the question, really track your activities. And a great way to do this is just keep a little piece of paper and write down everything I did today. And then next to it, say, how much would it cost me for someone else to do that? And then the other rule I had to create for myself is, if somebody else could do it 80% as good as me, it should be leveraged. Because I tend to think, and I think a lot of us fit this category, I tend to think nobody can do it as good as me. And that's a limiting belief, because the truth of the matter is that most of my leverage in the form of people do it much better than me. But if I can answer the question, yes, somebody could do this 80% as good as me, I got to figure out a way to leverage it, because it means I could go spend my time doing a higher dollar productive activity. How much money do I make per hour? What are my sweet spots? What are my sweat spots? Where am I sweating more than I'm making? So I like that, the sweet spots versus sweat spots. And is it time to outsource or insource? Where should I leverage my time? So a couple things I want to mention real quick is I run all my businesses through QuickBooks, and I run all my businesses separately. I also run my personal finances just like a business, so I can track them religiously as well. Now, for some people that may feel really daunting to tackle QuickBooks or an accounting software, and it doesn't have to be that way, particularly for you agents that are running either solo as a single agent or with a little bit of leverage. And you can run this simply through a spreadsheet just like this. And I'm going to attach this to this video, is this Excel spreadsheet that really easily tracks, where you can easily track your profit and loss. So you can see how easy this is. There's a column for every month, and I've already built in all of the equations. So all you need to do here is, how much money did you make on your listing gross commission income? How much on your buyer gross commission income, any referral gross commission income, and it automatically adds up. What was my total income for the month, for this month? Cost of sales, okay? How much of that money went to the brokerage, company dollar? So you can see here, out of 15,200, 4,560 went to the brokerage, 912 went to royalty. So this agent hadn't capped yet. Did I have a listing specialist or a buyer specialist, or any referrals paid out? In this instance, no. So my total cost of sales was $5,470. My expenses. Now I can go through. These are how simple the categories are for expenses. At this level, there were no salaries. I spent $750 on a lead generation effort. My rent was $250. I paid, this isn't mine, but this agent specifically paid $150 in some additional technology. Their phone bill was $150. They spent $30 on some supplies, $55 on education and dues, $85 on auto insurance, and $500 for some professional services. So this agent spent $1,970 on expenses. Now we can see the business profit was $7,758. This agent also made $12.50 in profit share this month. Any other expenses is they calculated in what their income tax should be. Total other expenses, $2,280. You can see this net income was $5,495.50. So the point I'm trying to make here is most agents would look at this and be like, man, I made $15,200. I should go buy a new Toyota Prius. Maybe not. I don't know what they cost. But the point is in the end, you really only, you made that much money, which you should celebrate, but you invested some of that money back into your business. And in the end, what ends up in your wallet is $5,490.50. Okay. So simple. This is, if you open a separate business credit card, run a separate business account, this should only take you at about a maximum 30 minutes to do, probably closer to 10 to 15 minutes. And you have a running total. You can see on the spreadsheet, there's a column for every month, and then a total for the year, and it sums it up for you. So there's a very simple way to do it if it feels intimidating to get into a QuickBooks type software. So I really recommend doing that at a minimum, that piece. So we're going to wrap up here. The point of this conversation is if you have to work harder in this market than ever to make more gross commission income, then it becomes critical for you to learn the skills to better protect that money. So there's two pieces of this. We're getting better at the skill set to increase and protect our gross commission income earning opportunities. And we're going to couple that with the imperative skills for you to protect that money that's coming in, so it doesn't just go right out the back door, that we have a very specific purpose for where that money's going, partially investing back into our business, partially investing in ourselves, and partially enjoying life and living that life worth living, and really going from an agent that thinks solely in gross commission income to an agent that goes from gross commission income to net income to creating a phenomenal net worth. Which I think is the real process, the mindset of a top performing agent. So thank you guys for plugging into this. I'll attach this spreadsheet for any of you that want to use it to the page this afternoon. Any questions or comments before we wrap up our conversation today? Take that as a no. Thank you guys for being on. Appreciate being in business with you guys. Make it a great week.